Hey everyone, welcome back to the channel. Today we are going to talk about the 3 best ways to invest and why they are the best ways to invest. Investing can be a great way to grow your wealth and secure your financial future. But with so many investment options out there, it can be overwhelming to decide which ones to choose. In this video, we will discuss the top 3 investment options that are proven to give the best returns. Before we get into it, we are currently on 25 subscribers and are growing by the day. Feel free to subscribe to the channel and like the video for more content like this. Let's start with number 1, which is stock market investments. The first investment option that we will discuss is the stock market. Investing in the stock market can be one of the most lucrative investments if done correctly. The stock market is a platform where companies sell shares to investors. These shares represent ownership in the company. As the company grows and becomes more profitable, the value of the shares increase and the investor earns a profit. One of the main reasons why the stock market is a great investment option is that it has historically provided high returns. Over the last century, the stock market has averaged an annual return of around 10%. This is much higher than other investment options such as bonds, which typically have lower returns. Another advantage of investing in the stock market is that it is relatively easy to get started. There are many online brokers that make it easy to invest in stocks. An online broker that I recommend in the UK is Trading 212. They offer very low fees, and their platform overall is very solid. You can also invest in stocks through mutual funds or exchange-traded funds, ETFs. However, it is important to remember that investing in the stock market can also be risky. Stocks can be volatile and their prices can fluctuate rapidly. This is why it is important to do your research and only invest in companies that you believe have strong growth potential. Investing in the stock market can be a great way to grow your wealth over the long term. However, it's important to remember that there are risks involved, and it's not a get-rich-quick scheme. It's important to do your research and choose investments that align with your financial goals and risk tolerance. One way to mitigate risk is to diversify your portfolio by investing in a mix of different companies, industries, and asset classes. Another key point to consider when investing in the stock market is to focus on the long term rather than short-term gains. Trying to time the market or chase after hot stocks can often lead to losses and missed opportunities. Instead, it's better to adopt a buy and hold strategy, where you invest in high-quality companies and hold onto them for many years. Number 2, real estate investments. The second investment option that we will discuss is real estate. Investing in real estate can be a great way to earn passive income and build wealth over time. Real estate investments can come in many forms, including rental properties, commercial properties, and real estate investment trusts. One of the main advantages of investing in real estate is that it can provide steady cash flow in the form of rental income. Rental properties can also appreciate in value over time, which can provide additional returns when the property is sold. Real estate investments also provide a level of diversification that other investment options do not. Real estate investments are typically not correlated with the stock market, which means that they can provide a hedge against stock market volatility. However, investing in real estate can also be more complex than investing in stocks. It requires more upfront capital and more research to find the right property to invest in. It also requires ongoing management and maintenance of the property. Real estate can be a fantastic investment option for those looking to build long-term wealth. While it does require more upfront capital and ongoing management than other investment options such as stocks, it can provide steady cash flow in the form of rental income and long-term appreciation in value. When investing in real estate, it's important to do your research and choose properties that are in desirable locations, have strong growth potential, and are well managed. Additionally, it's important to factor in all the costs associated with owning and managing the property, such as property taxes, maintenance costs, and property management fees. Number 3, cryptocurrency investments. Cryptocurrency, such as Bitcoin and Ethereum, has gained immense popularity in recent years as an investment option due to its high potential for returns. It's a decentralized digital currency that's not controlled by any government or financial institution, providing a level of privacy and security that traditional investments don't offer. One of the primary advantages of investing in cryptocurrency is the potential for high returns. For example, Bitcoin has seen significant growth since its inception, with its value increasing by over 300% in the past year alone. However, it's important to note that this high potential for returns comes with equally high risks. The cryptocurrency market is incredibly volatile, and prices can fluctuate wildly in a short period of time, leading to significant losses. Another argument in favor of investing in cryptocurrency is that it's a hedge against inflation. Inflation occurs when the value of money decreases over time due to factors such as government policies or economic conditions. Cryptocurrency, on the other hand, is designed to be a deflationary asset with a limited supply that cannot be manipulated by governments or central banks. This makes it an attractive investment option for those looking to protect their wealth from inflation. However, it's important to approach cryptocurrency investments with caution and to do thorough research before investing. The cryptocurrency market is largely unregulated, and there are many scams and fraudulent activities taking place. It's crucial to choose a reputable exchange or platform to invest through and to carefully consider the risks involved. Moreover, as the cryptocurrency market is still relatively new and evolving, there is a significant level of uncertainty around it. This uncertainty can lead to a lack of liquidity, making it difficult to buy or sell cryptocurrency at the desired price. Additionally, the regulatory landscape around cryptocurrency is constantly changing, and there is a risk of new laws or regulations that could negatively impact the market. Of course, as always, I highly recommend you do your own research into the topics that we have discussed here, as this video is not financial advice, but also because you may find alternative ways to make better investments that may not be mentioned in this video, and you will only find your best investments to make if you are building up your own conclusions as a result of your own research. I hope you enjoyed this video. If you did, please comment, like, and subscribe. It will really help the channel out and motivate me more to keep bringing great content to you for free. See you in the next one.